Hello everyone, and welcome to the Market Daily by Investing Angles. Today, in our usual overview, we will discuss the candles, the Elliott Waves for the major indices, for the volatility index, and we also add some large cap stocks into our overview. So if you find the content beneficial, please don't forget to subscribe, and we begin. So we start with the candles. For the candle assessment, we use the major indices ETFs, and let's start with SPY. So what we can see here, the candles are obviously very bearish at this point, and the large red candle, it closed below the previous day low, and it broke through the major resistance line, 100-day moving average. We can see that technically everything is bearish if we take the candles just as the pure ones. Speaking about Nasdaq, it is sitting right now on the 200 days moving average, and if we look at this chart, the last time it happened when Nasdaq crossed this 200-day moving average line was in March 2020, when we had a huge correction. So generally, we are on the verge right now, and we can move much lower. So at least the candles pointing towards downwards movement. Speaking about the Dow Jones, we have a fairly similar situation when the candle is sitting right at the 200-day moving average. And about the Russell 2000, we can see that the candle finally broke through the major resistance line. And if we have a confirmation tomorrow, well, we can consider that we are moving lower, and possibly much lower. So what we can also say about the candles, that all of them moved below the Bollinger Bands, and that's could be a positive sign that we might see some sort of, at least a local reversal tomorrow. Yeah, the candles are very bearish, and I would like to say that if there is no reversal at this point, and we don't see anything green tomorrow or Friday, all indices gonna finish this week with very unfavorable red candles, and this correction is likely to extend into multiple weeks. So this is the candle view, and let's have a look at some technical. So this is Dow Jones futures, and this is an hourly chart. What we are seeing here? So we are seeing like a healthy diversion on the RSI. There is a possibility that this third lower low is the final one, and we could see a healthy move upwards from here, from RSI being oversold on the 1 hour chart. Well, there is a possibility, and we'll see how it plays tomorrow. Speaking about Nasdaq, so now we are moving into our Elliott Waves section, where we are trying to estimate the length of these waves down, and where it can actually finish. So we have a correction that started in November. be okay. So this is right here. We had a wave one, wave A. Then we had a wave B, and now we are working wave C, and it looks like this wave is a motive wave. So we have fairly clear 1, 2, 3, 4 waves, and this could be the wave that we are seeing right now. It could be the last one. So from the perspective of Elliott wave ratios, uh, the most typical wave length of wave C is somewhere between 1, the length of wave A, to 1.618 length of wave A. So this is the red Fibonacci's here, and I also measured the wave C itself from the by different uh, Elliott waves level, and there is a possibility that we are actually ending right here. So the wave C, well, is about to be of a perfect ratio compared to the other waves and subwaves. Well, if we have a healthy reversal here, and we can see a motive wave upwards, well, that there is a possibility that this correction is over. So let's move on and have a look at the SP 500 futures. So as I identified earlier and discussed, so we have a very good shape here, which is most likely wave 2, counting wave 2, speaking from if it started, if the motive wave started at the September. This is September bottom. This is wave 1 from September bottom. So the most typical retrace for wave 1 would be 0.5, 0.618 or 0.786. But these two, 0.5, 0.618, are the most typical retraces for wave 2. And we are getting close to this area, just a few dozen points away. And there is a chance that we can retrace here. So, and another way of measuring this wave is measuring wave A versus the length of wave C. The two most typical retraces, the ratios that wave C equals wave A, and wave C is also 1.618 of the length of wave A. So I put this rectangle here for the most covering the most typical retraces. Well, we'll see whether it ends up here. So it would be absolutely normal, and if again we see a good rally from here, well, we can declare that the correction is over. So let's move on to the volatility index. What do we have here from candles perspective? So we can see the daily candle. We have a hammer here, and this hammer is sitting above Bollinger Bands. Well, that's clearly a bearish sign here. If we look at this chart, we can see that every time volatility moves above Bollinger Bands, we have a reversal. And I put these 2-hour this 2-hour chart as well. We can see that on a 2-hour chart we have a bearish engulfing, like third candle here from the backwards. And if we look at it, it hasn't not been cancelled. There is a chance that we move down from here. And if we look at RSI, and if we look at MACD, we are seeing a healthy divergence here. So there is a chance that tomorrow we can see a very bearish move. So this was the volatility index. Well, if you like the content so far, please say so, and don't forget to subscribe to our channel. And the final, I would like to have a look at the major, the big market players. So what are they saying to us? I have here Microsoft, Amazon, Apple, Meta, Exxon, Nvidia, Alphabet, and Tesla. In general, all of them are very bearish, except maybe for the Meta platforms, which printed a very nice bullish Harami cross. We'll see how it works, but this is not the main point here. So that everything looks very bearish. I would like to look below, at the smaller frames. This is Microsoft, for example. If I have a look at 1 hourly chart, 1 hour chart, I can see that even though the price was moving down here, we can see that RSI is moving up. So this is a rather healthy reversal pattern. And if we see a reversal tomorrow, and by the way, the similar patterns exist in almost every stock here, except for Exxon. So there is a chance. There is a good chance for reversal, and it looks like the hourly candles and the technical indicators are pointing towards a possible reversal. So let me summarize what I have told you. So the volatility index is an overdrive, and looks like it is losing power, so it is ready to turn bearish. The major indices daily candles are bearish, and the expectation is that they move lower. However, the hourly charts are pointing towards a possible reversal. From the perspective of Elliott Waves charts, they show that indices are close or already in the areas for the most typical wavelengths for the corrective patterns, for the corrective actions, and they could hit their targets and reverse. Large stocks seem to be ready for reversal as well. What we need to see is strong reversal candles, strong green candles tomorrow, and if it happens, then we might have the end of this correction. However, if there is no strong action in the remaining 2 days of this week, the indices are going to print a very unfavorable weekly candles, and the correction could extend into multiple weeks. All right, this is all. Uh, Please remember to subscribe and spread the word about our channel. The charts I'm planning to post on our blog later tonight. However, they will be accessible for the paying subscribers only. And I would like to wish you a profitable day, and thank you for watching and listening. Goodbye.